the sentiment on the ground is as bearish as it has been for the past year or two, and it continues to be so. And I don't think that that is something that is going to change, not this year, not next year, not even until 2030, right? It's not just the conversations we have with folks here in China, but it's also the data that we're looking at that clearly shows that we're not out of the woods yet, and we're probably not going to be out of the woods here until 2030 or so. I can go into details in terms of some of the data that we're looking at. For example, one of the things that your viewers may want to take a look at is what we call in the U.S. as a month supply, or basically the way to look at it is how many months does it take to clear a set of houses that came on the market for a particular year. So if you take a look at the U.S., for example, it is around 4 months, while here in China, it is spiking to 20 to 24 months. What that means is the homes that are being put on the market right now, if you want to truly understand their impact, you're going to have to see to it that you wait until 2029 to understand really what the impact is, right? So it's a very good predictor for us, and it predicted for us the numbers you've seen from 2025 in terms of as the month supply continues to increase in China, you will continue to see weakness in the real estate market. And that is something that is very, very palatable to everybody here in China, including the households.
So with this long protracted decline that you're expecting in the property market, what will this mean for property prices? I mean, they've really come down 20%, I think, since the peak or since the defaults began. How much more decline are you expecting?
Well, again, we've looked at this data, and we're not ones to come up with a sensational number, but conservatively, and we try to be as conservative as possible, we're saying that there's still 40% more downturn that needs to take place before you can start saying that things are going to level off. Now, you're not going to see that 40% in a year or two or three. It's going to be a continuing trickling effect. But yes, based on our most conservative data, we're seeing an additional 40% decline is very, very likely. And if we're lucky, we're going to see it around 2030 or maybe slightly after 2030.
All right, so that's the cue to run for the exits. So why aren't policymakers doing something about this? I know that the NDRC is holding a press conference on the 15th five-year plan. Is this a good reason for it to be higher on policy priorities?
Absolutely. It's very high on policy priorities, but policymakers also recognize, and that's the part that they won't talk about a lot, is there's not much that you can do about it, right? Because this is something that is very systemic and very core to the Chinese economy, or more specifically, very core to consumer sentiment and consumer spending. So just to give you an example, home prices isn't necessarily just something where you look at and say that it's the core market that is weak. There's a strong correlation between the housing market and savings rates. So saving rates have more than doubled since 2021, where they were a decade before that, right? A clear sign that they understand that the value of their property is going down, so they have to find alternatives. Real estate sales as well, right, is very closely correlated to home prices. And what needs to be understood is the uniqueness of the China market, right, where you have 90 to 96% of citizens or households owning homes, right? But beyond that, if you look at that, you're going to find that on average, they own 1.5 homes, right? Compare that to the US, where the average homeowner, who's only 69% of the population, owns one home, right? And there's roughly a third who own two homes and or more, right? So this is clearly a replacement to their social safety net. And as they see their social safety net decline, they're going to be taking longer term decisions that's definitely going to impact consumer confidence for the long term.